Morning, Steve Freed with the morning grain comments. Markets are a little bit higher overnight. Minneapolis wheat continues to trade higher versus Chicago and Minneapolis on expectations that dry weather over the next, let's say, 30 days in the Dakotas and Montana and even the southern prairies of Canada will reduce the hard red spring crop. USDA estimated their crop some of the lowest on history, and there's not a lot of rain in the forecast. The algorithm machine sold off corn and soybeans yesterday in anticipation that much of the Midwest, including Iowa, will see good rains over the next 10 days. The interesting thing is that the second week of the maps are pretty consistent, that the northwest part of the Corn Belt, maybe including parts of Minnesota, Iowa, the Dakotas, maybe even northern Nebraska, will see less than normal rain and above normal temperatures. So again, we'll kind of go back into that warm and dry time period. I think that with 41% of the U.S. soils in drought stage, that number might decline with this week's rains, but still maybe 25 to 30% of the Midwest will have dry soils. And then if this forecasts are right, the only places that might see abundant, adequate soils would be Missouri, Illinois, Indiana, the Delta, and maybe even the Southeast. So again, I doubt if we'll see a record corn or soybean yield because of this forecast. It's just that the algorithms are focusing right now on two things: the rains that are going to happen over the next 7 days across the Midwest, and the fact that USDA will probably increase corn acres on their June 30th report. Other than that, we did see the Fed chairman yesterday talk about how inflation is going to be a passing phenomenon. Also talked about he was a little bit disappointed in the jobs situation. It's slower than he had hoped. But also we noted that U.S. housing prices are at record high right now. So on certain things we do see inflation like food and energy, but in other things he thinks that that's only temporary, which is stabilizing the stock market and also some of the commodity and energy markets. The concern about higher rates slowing the economy seems to have been postponed for now. So again, June 1 stocks, corn, beans, and wheat should be below what they were last year. If they're below the average guess, we go higher. If they're above the average guess, we go lower. There's certainly a big premium of July corn over Sep corn, and also July beans over September beans. And most of that would suggest that farmers aren't selling, and that also there is a tightening supply of old crop. Commercials continue to be short corn. As always, these are my thoughts and not those of ADM Investor Services. Have a safe and profitable trading day.